President Biden's plan outlined includes more than $2 trillion in spending over 8 years' infrastructure and economic recovery package. The plan aims to modernize U.S. water systems, transportation infrastructure, schools, roads, broadband, and manufacturing, among other goals. In Pittsburgh, speaking at a union hall, the president called it a vision to create the strongest, most resilient, innovative economy in the world and millions of good-paying jobs along the way. In this video, we are going to tell you how Biden tax plan will impact US companies. The video is going to be amazing, so make sure you stick till the end. Biden administration announced a plan of $2 trillion to modernize the country, rebuild America. Biden was coming to the rescue. Aging, unstable dams and tunnels, leaking water pipes. More than half of schools in need of renovations. More than 43% of public roadways in very poor condition. And almost half of the country with no access to public transit. According to resources, Biden's plan is to spend $200 billion into building affordable housing, $100 billion to upgrade and build new public schools, invest $580 billion in American job training efforts, manufacturing, research and development, $100 billion to modernize and upgrade the power grid, $400 billion to care for elderly and disabled Americans, $100 billion into improving drinking water infrastructure, and almost $621 billion for transportation infrastructure, such as roads, public transit, bridges, airports, ports, and electric vehicle development. Funding for 500,000 new charging stations to make it easier for Americans to buy American-made electric vehicles. Biden said he will unveil the second part of his recovery package in a few weeks. These are investments we have to make, Biden said of revamping U.S. infrastructure. We can afford to make them. To put it another way, we can't afford not to. Biden's plan really combines two very different initiatives. It would cut taxes for low and moderate income households by about $1 trillion, mostly by creating or expanding tax credits, and it would raise taxes on corporations and high-income households by roughly $3.1 trillion. The Biden-Harris tax plan was initially released in spring 2020 and has been modified several times since that date. The party faces challenges in approving the $2 trillion infrastructure plan. The GOP broadly supports efforts to rebuild America, bridges, roads, and airports, and expand broadband access to all Americans. But Republicans oppose tax hikes as part of the process. Mitch McConnell, Senate Minority Leader, dismissed the Republican support for tax hikes to Joe Biden's infrastructure plan. At the weekly Senate Republican press conference, McConnell said, "I don't think there's going to be any enthusiasm on our side for a tax increase." The conventional wisdom is that President-elect Joe Biden's ambitious tax agenda will die in the Senate. But don't be surprised if Congress approves at least some of Biden's tax plan, even if the GOP barely controls the Senate. The Senate Democrats favor tax hikes to finance price tag between $2 trillion and $4 trillion. Biden certainly won't get all of his proposed $2.1 trillion tax increase over the next 10 years. But Congress could pass a revenue-neutral bill that pairs a tax cut aimed at low and moderate-income households with modest tax increases on corporations and high-income individuals. Before year-end, wealthy people in America are scrambling to change their estate plans, and many business owners looking to sell their companies are accelerating deal timelines in order to avoid a bigger tax bite. The biggest reason is that the US Congress could give Biden the power to pass a sweeping set of tax reforms. Under the tax plan, the tax would apply to those earning over $400,000. The main action the wealthy Americans are taking now is giving money to friends and family. Under the current estate and gift tax, couples can give away up to $23.16 million, and individuals can give away up to $11.58 million over their lifetimes without paying the gift tax of 40%. Wealthy Americans are nervous that an exemption allowing individuals to leave up to $11.58 million to heirs could be cut in 2025. For many clients, this is a motivating factor for gifts they were planning to make all along, Handler said. The $11.58 million question is, what is going to happen to the gift and estate tax exclusion, said Tony Ann Cruz, a New York State lawyer. Democrats in Congress have been trying to lower the exemption for the estate and gift tax to raise more revenue. Joe Biden is running to rebuild the backbone of this nation, the American middle class, by ensuring that our economy rewards work and not just wealth, he said. Philip Michaels, New York estate and tax planning lawyer, has added around 14 wealthy clients during the several months who are revisiting estate plans. Winston Shows, a senior vice president at investment bank and financial services firm Houlihan Lokey Inc., said, "I have in the past few weeks on 3 separate occasions had sellers indicate to me that the potential tax increase under a Biden administration is a primary driver of the timing of their transactions." Under Biden's proposal, business owners with higher income would face almost double the taxes after a sale. Capital gains taxes are applied to the value of an investment in an asset. Accountants say many of their customers are starting to change their permanent residence. There are various companies that went every single year without paying taxes. In fact, many of them received money back in taxes. The capital income tax rate in America is 37%, so how are some of these companies like Amazon paying nothing? There are 3 useful ways, and US companies used them to avoid tax in the past, and these ways are also useful for the future. Offshore tax sheltering. Not every country has as high of a corporate tax rate as America. In fact, some charge none at all. So many companies are taking advantage of this. These companies are legally allowed to avoid paying foreign taxes on profits before being brought home. So what these companies do is take advantage of this incentive by maintaining their profits offshore for extended periods of time. In fact, some of these companies never bring their profits home, meaning they never pay US taxes on them. There are definitely some more technicalities to be talked about here, but really the important thing to know is that they're cheating the system. Employee stock options. This way of saving money on taxes is much more ethical, and it can not only save the company tons of money on their taxes, but it can be a big bonus for employees. First of all, stock options that companies offer to their employees are like regular options. It's basically giving an employee some contracts for options, meaning that if their stock price reaches a certain amount by a certain date, the employee can then buy the stock at a discounted price and basically make an instant profit. The difference between the discounted price and the market price can actually be written up in their taxes as deductions. This essentially erases money that the company would have to pay otherwise. Accelerated depreciation. Companies record their assets depreciating much faster than they actually do, instead of a linear depreciation. So let's say a company owns a pump jack that makes money for them by extracting petroleum and then selling it, and that pump jack, when they buy, it is worth $25,000. That's how much the asset is worth. After a year of use, it depreciates, of course, and let's say the actual depreciated value is $24,000. But they're not going to say that. They're going to say that it's actually worth $20,000 to save money on taxes. Once that asset is all done for its use, it'll be worth the same amount by the end of it, except in the beginning years it depreciates faster. So what do you think? Will Biden's tax plan affect US investment abroad, especially in Ireland? Let us know your opinion in the comments section below. Don't forget to subscribe to our YouTube channel. Hit the bell icon for more updates and notifications. Stay safe, and we will be back soon with another video.